This is the monthly chart of Sweetgreen. Now, I'll be honest, I've never heard of this stock until this past week. But what I can say is that we have bottomed. You have two monthly doji candles around the $8 level. What I can also tell you is that based on the last 3 months accelerating to the upside, resistance is going to come in at the $21 level. So what's all the fuss about Sweetgreen? Well, let's get into this video by way of Yahoo Finance.
We're taking a closer look at today's top trending stories. I'm taking a closer look at Sweetgreen. Shares surging today after the stock got an upgrade from Bank of America from neutral to buy. The firm also raised its price target to $17 a share. Key levers include automation, an increase in visits, and potential for higher digital sales mix. That drove Bank of America's decision for that upgrade. Now, in addition to that, taking a closer look at automation, they do have that new pilot in Naperville, Illinois. They said that it shows meaningful opportunity for the chain to narrow the profit margin with its big rival, Chipotle. In addition to that, we're also seeing visits up. Many investors on the street worried that since it has such a large urban presence, that delay to the return to the office would impact that visits. But now we're seeing that change a bit.
Yeah, we are seeing that change a bit. Certainly, we have seen the stock take off since the start of the year. Really, a lot of those gains coming within the last month and a half or so, as we have seen the share price skyrocket. It was interesting to me, that line that you just read about Chipotle narrowing that leadership gap. It makes some sense to me, although I don't necessarily see them as a direct competitor. I almost think that Sweetgreen, people that go to Sweetgreen for lunch, I don't know if their other option out there would be Chipotle. Now they have Cava, that's also a publicly traded company in the mix that you would think would also be a competitor along those lines. But Sweetgreen certainly resonating with its urban customer base, a lot of their stores within the cities here. And as we see that return to office, more and more companies bringing back their employees, at least on a hybrid type of schedule. Sweetgreen, one of those companies that could benefit from that, and this.
For sure. I mean, that lunch crowd, that lunch kind of like surge of people coming back from the office. But 46%. I think it showed that visits up year over year. That's a lot. I had no idea that Sweetgreen's traffic was up that much. But like you said, for me though, okay, Sweetgreen's a little expensive, right? And Chipotle is like almost like $5 cheaper per ticket for me. So for me, it's sort of, I don't see them as comparable at this point.
Right.
Whereas, I mean, it is a lunch option, but I just feel like I find that price point really high. Cava as well, price is very high. Lots of enthusiasm for the IPO, right? So maybe I'm missing something here. Maybe that's the new normal. People that are sort of returning to work, it's happening slowly. We're seeing the data come up with offices coming like 50% occupancy, kind of perking up a little bit higher. Maybe this is a good thing for Sweetgreen, but I find their prices to be kind of out of control.
And also just what that expansion plan looks like. They have introduced a loyalty program, which Bank of America mentioned in this note, Sweet Pass, which they think is really paying off and one of the catalysts here going forward. But in order to expand that base, given the fact that these salads are very expensive, and I think in a time in an environment like this where some consumers are pulling back on their spending, they're not necessarily willing to go out and spend 15, 16, 17 bucks on just a salad.
Yeah, but Bank of America also noting that they see a potential upside to that digital sales mix. I mean, with that loyalty program, they also have Sweet Pass Plus, they're calling it. It's $10 per month. It offers $3 off daily orders as well as other perks. And I think with that being said, if you are a loyal customer and you're willing to pay $10 off, that $3 could make the difference.
Well, I'm just thinking about how, it got my attention. I'm going to look into that. But the thing is that if you're already making me come back to work, why don't I spend $20 on salad? Like you're almost like
paying
going
for that
like
commute.
and you weren't paying that money when you're working from home.
I know, it's so hard to avoid though in the New York City area. I feel like if you go out there, you're paying for a sandwich, you're paying for anything. You're at least the minimum seems to be 13, 14 bucks.
All right, so Sweetgreen is in the fast food category, upscale fast food category of the likes of Chipotle, Cava, who also went public recently. Just kind of recap some of the highlights from the video. So the stock gained 40% on Thursday after the Bank of America upgrade. The rating change reflects a spike in foot traffic, as the article mentioned. A return to the office is a major contributor to that, leading to positive same-store sales gains and long-term automation plans. BAC analyst Catherine said in a note to clients, the firm also raised its price target to $17, up from the previous $9 target. That was where we saw a bottom on the monthly chart. This reflects a target of 30% higher. The firm estimates Sweet Tea to end fiscal year 2023 with restaurant level margins of roughly 16%, compared to estimates of Chipotle of approximately 27%. So I guess that's the difference between salad and Mexican food. Chipotle sells avocados, very expensive. I don't know, $20 for some green leaves seems to be pretty crazy. Per data cited by Bank of America from data intelligence platform, visits to Sweetgreen are up 46% year over year in the second quarter of 2023 thus far. This is up roughly 7% from the first quarter. Now, Bank of America estimates this momentum to continue. Sweetgreen's increased focus on improving operations could be driving customers to return to stores more frequently. Now, I love their Sweet Pass, but again, I'm not paying $10 a month to get $3 off a plate that costs roughly $15, $20. However, the price point should be good for the stock, but you would think that the margins would be a lot higher, more comparable to Chipotle. So let's go to the weekly chart. And if you were a conservative trader, you would have waited to see prices close above the $10 level. So you would have been giving up $5 for confirmation. Another way you could have did it, could have waited for price to break this trend line. That would allow you to get into the stock a little sooner. How would I have played this? Well, let's go to the weekly, the daily chart. This was on earnings, which was an indecision candle, and then momentum continued to respect the moving averages. So you go from the weekly, where this would have been a conservative point to go long. Now the daily, you have that similar pattern because price is fractal. And so potentially on earnings, that was the opportunity. Even if it gapped up higher, that would have been an opportunity to go long. So price has to cool off a bit. You can see on the weekly chart, you got 3 green extended range candles. Let's go to the daily chart because I want to see this $17 level, this wick over wick. You do have price now above the 200-day moving average, which is very bullish. Okay, that's a gap fill. So I like the analyst target at 17. Call it what you want. Maybe she's a technical analysis guru as well. But that would be the gap fill on earnings where there was huge volume to the downside. That's a good target. All right, so yep, I missed this one, but something worth keeping an eye on for the next, say, decade. Thanks for watching. Subscribe. Please like the video.